Friday. So it's just a giant rotation situation going on this week that you can kind of see across the board. So yeah, energy's looking pretty solid on rotation as an overall. And then you've got a lot of single names that are moving around this week too. So we're kind of sitting and waiting. Been saying that a lot lately, but we haven't really moved anywhere in the last couple of weeks besides up and down. So like the Russell last night, like I was talking about the Russell, and the Russell was like down 2%, and when you open, and then it got cranked up 2.5% vertical in the session today. So I mean, options expiration usually plays a lot of games with folks, and this one's probably pretty important because you're going to see some positioning changes into year end coming out of this that are pretty interesting. So
yeah, speaking of year end, Tesla just got added to the S&P, but won't happen until December 21st. So this is going to need to be absorbed. And by the way, I apologize. I had paused the recording and then just hit record. So you missed my opening, but that's all right. We'll get on to the important stuff, which is market review and then in-depth on China. I can remember the nuances here of recording. I just talk live in my live trading room, so I don't actually, it just automatically records. Anyway, I'll get better at this. Yeah, Tesla is being added, and it's a really big stock to absorb. So I'm sure they have been, in some regards, front running this, if you will, selling others because they're taking on Tesla. Or if they already have Tesla, it's getting rebalanced, obviously, in the S&P. So they've gotten to the 21st to make this transition. And I had actually tweeted that it could be a disturbance. Buffett had said large cap inclusion into the S&P can typically cause some disruption. But they've got enough notice on this that it also very well could see that single stop gamma option flow up into that, the higher levels. It's at 440, so wouldn't surprise me to go up to 500 by that time as well. So what's your feel on that big news, Tesla being added, even though they did not really meet the requirements for the committee? If they didn't have those EV credits, they wouldn't have been profitable and certainly didn't meet 4 quarters worth.
So are they going to make money now? Is that the deal? So Tesla's going to become very profitable?
They're going to do an offering. That's what they're going to do.
Right. Yeah. It's an options play, right? Like that's an option stock. Like, if you do a study about that going back 3-4 months and how they utilize the gamma situation for options to be drawn up based on gamma rebalancing, they just were experts at this, and they created a significant tailwind for the stock appreciation. And you can see it today. We're releasing options flows, a beta version tomorrow for people to try inside the app, and you'll be able to see large options activity. So we cut out anything under $20,000 in premiums, kind of small lots or noise per se. And when you look at that today, and you were looking at single stocks, and I'll do a shameless plug real quick. Like we've got the top 100 most traded, heavily traded stocks in there, and then there's a button for anybody to add, hey, I want to see this. Can you add it too? Because we don't know what everybody wants to see.
Show us that next week, would you? Because that's huge. Because in my live trading room, I am following flow, and it's sometimes the peppering, of small, but that's not it. I want to find a chart that I really like and then see what's getting bid up in large size that might be unusual. And it was interesting. Yesterday, I called out a large Tesla call option, which was December 11th, the 417.50 calls, and it was a few $1 million worth.
Yeah.
So it wasn't a big positioning out in January, March, it was December, and wouldn't you know, then they announced right after hours.
11% move this morning, right?
Yes.
Yeah. Bingo. So, somebody made some money, right?
And NEO, has just been hot fire flames in its single stock option gamma, run. So yeah, we see that a lot. In my trading room, I would love to see that in your app and then be able to have some flexibility, especially the stuff of size, which if it isn't necessarily, the SPY, options that are being traded, but also are they opening or closing, that kind of thing. That would be, added fuel, if you will.
For sure. It's in there, and everybody be able to use it kind of as a free trial type beta type structure for a little bit. Tell us what you want, what you like, what you don't, et cetera, because it's really, really new. But you could see that today. You could see Tesla. I mean, it was really hot with the call option activity. I mean, all call option activity. Some people closing, but a lot of people opening when it came back down. So that's like one of those stocks that I don't really have much to say about the S&P 500 inclusion. It's more of a I mean, guess it's going to get more liquidity. I don't think much is going to change from the stock standpoint, though, right?
Let me point out that when you write about this stuff, you're doing it here. So Jonathan has obviously his VigTech app products, but there's also at the far right side, the juice, which is an overview of kind of like highlight in the market activity, especially as it relates to headlines, COVID, Fed stuff. Some disarmingly funny commentary sometimes. And then I think you're toning it down. You're getting right to what's under the hood and calling out the dollar, the volatility, the precious metals. So this is a good view. And it's funny because I use similar software. Obviously, you've made it look really well packaged, but I'm doing the same thing, in my analysis, which is the sector moves if there's accumulation or distribution, like right now in precious metals, there isn't. It needs a trigger.
Yeah.
So, but then I am going a little bit into, for example, my thing, which is I talked today with clients about this reopening rotation rally and the risks. For example, the that yield pop that we've had, which indicates perceived economic recovery, can get just as quickly whacked by FOMC minutes coming up in December. And even early on, they're talking about extending purchases or increasing purchases before the FOMC, which would pull back that the yield pop that's been going on. But one of the things that is very, very front and center for traders right now is this glomming on to the reopening or rotation play from the vaccine announcement, not just last Monday by Pfizer, but this Monday in Moderna. So, I mean, it has not, it's consolidating. It has not retraced. It has not reversed. And now you've got big, the wirehouses are coming out and saying, hey, we're going to have the dollar fall 6%. Bank of America out with their global fund managers survey, which I tweeted earlier today, which has emerging markets #1 for 2021, has oil as their number 3 top trade for 2021. It's been, I don't know, it's down like 98%, the energy sector. So it's got no place to go but up. But the pace, it's not a straight line, which is basically my point. Anyway, lots of folks coming out talking about the rotation rally and how it has legs, from JP Morgan with 4,500 SPX in sight, Morgan Stanley, gold party is over, bicyclicals. So it's now all of a sudden the sentiment has turned viciously from value is dead to long live value.
I mean, because of the last week.
Yes.
I mean, you had the one day that squeezed everybody, and then it retraced to Friday or Thursday night, and we had exchanged a couple of comments with each other, and I meet with a few other people, and there was IWM and the Russell, RTY staring into the abyss on Thursday night in the future.
Cliff diving. I called it just about ready to cliff dive.
It was gone, and voila, gap ramping camp action in the futures again, and 3% from Thursday at like 11 p.m. to Friday a.m. and hasn't really looked back, and they got it back square. And then you have the Moderna news on Monday, and
which wasn't
vaccine Mondays, right? We're curing short sellers is not what we're not curing COVID. We're curing people who want to short, right?
The vaccine is in the markets, not in our veins. That's how
right. Right, exactly. So I don't know. I mean, I don't think you can buy it. Yeah, you've got to trade it, right? But like buying it, with the winter that we're gonna face, I think people, Shy Girl said something the other day about the dollar, because she's huge into oil space, right? And I follow her, and she said that euro, right, when they come out, they're gonna come out with a bazooka, in December, and you haven't really heard much about that. And I think it's a pretty poignant statement that, you know, we're not the only ones that are going to try and do this, you know, devaluation structure. And then I'll mention something in the China conversation here in a minute about the dollar and how the dollar is really kind of a last ditch weapon for the United States in a bigger play. So I'm not sure that I buy the 20% dollars dead deal,
Oh yeah,
because
that's right. That came out too. City was
yeah,
saying
yeah, City said
20%.
that. Yeah, 20%. Which is, why don't we just go burn it in some trash cans, right? So like, you know, like, so I think that like, when you look at gold and silver, have always been a bellwether for me, and they're getting nothing. And then you got a little bit of shakiness in treasuries. I know 20 years have bounced a little bit this week, but it's still not back to normal, or I would say normal, but to a bullish stance, right? And I don't think much has really changed, and you keep getting these spikes, and volatility didn't get just drubbed Monday. I mean, it kind of was down, but it didn't get, you know, it didn't get taken out to the woodshed. It's kind of hanging around. And then I think you're getting some toppy readings, especially in the stuff that you track in your in I should say Sam's you know, kind of newsletter and correspondence on a regular
Intermarket.
basis. Yeah. And
Yeah.
it's yeah, those readings are kind of getting toppy, right? And I think that, you know, you got to be kind of a little bit dicey when everybody's in the boat. It's like Bitcoin right now. I'm concerned. I wasn't concerned about Bitcoin at all. I think it was pretty steady. There's been a huge bid on it, but now it's trapped, right? You got so many people.
I love your analysis on that yesterday, because I have a price target for weeks that it just hit today. And it's interesting because I called it, you know, a few weeks ago, the rich man's hedge.
Yeah.
So they weren't buying volatility. They're not buying the dollar. They're not buying gold, precious metals, right? And in particular, I had written about the gold trade, and this was just yesterday. Gold lacks a short-term catalyst, but my thesis in August was, no, this is like, until we get this fiscal, gold will suffer. And then Morgan came out this week and said the gold party is over, because it's just not getting any life, and the dollar's not falling fast enough. But basically, there's no hedging in the dollar, in volatility, it's in precious metals. It's all gone to Bitcoin.
Yeah, and that's a really concentrated trade that's really, I think, is a lot more dangerous than everybody understands the dynamics of it, because I would equate it to being in a crowded theater with one door. Like, you don't, you know, you don't have a lot of liquidity exits on that, because it's not easy just to get rid of. It's not as liquid as the options market. That's one of the things that they say is a real positive about it, but I think that's one of the things that creates major drawdowns on it. And so the illiquidity of that market, and even though it's getting, you know, people are more participative in it, I think until that is more liquid on a bigger scale around the world, and a lot of guys talk about that a lot more intelligently than I do, and a lot of Bitcoin, I don't want to call them fanatics, but you know, pioneer type folks are really trying to drive liquidity to it. But until liquidity is driven to it, you've got a single side bid on that right now, and that can flip with a whale. And you know, and then you got what, you know, like I say, like a months of price action can be erased in 2 to 3 sessions when you have gorpy upside drift where there is no back and forth price action. And I talked about that a million times.
Yep.
Blog, you have to have price action where you've got buyers and sellers disputing fair value, and then it moves forward. You haven't seen any of that in a little while for Bitcoin. So I think it needs to do some, you know, backing and filling from a discovery standpoint, and to see what the kind of the next huge positioning would be, because nobody's really intent in selling yet right now. And so you just kind of get the next level of buyers, right? And I think that can shake out dramatically. So you've got the dollar sitting there. You've got the euro, which has to be, they've got to take a step on. You've got volatility sitting there that really hasn't been blown out. And you got VIX expiration tomorrow that'll roll. Where's that going to go? And then you've got, you know, all the equity, you know, single stock option deal. Here we go again. I would say that, like, it's hard to say that everybody's rotating to value when everybody's in single stocks right now that are off the board. So it's kind of like an underlying bid in the market at the moment, more than I even see like rotation, because semiconductors are still, you know, they're back at the ATH, right? You
Actually, that was a question a client asked. You know how I use cumulative volume? You and I,
Yeah.
I use it a little bit differently. I use it on, you know, intraday, day, week, all
Yeah,
kinds
you
of
do.
time frames.
Yep.
And then I chart that sucker up. And then I overlay it with different indices and. So I'm very active in using cumulative volume as a tell to identify, buying and selling under the surface as a lead indicator. So, this has been, and we talked about this the past few weeks. I said, I don't see distribution under the surface.
Yep.
2 days I saw it, and we had a pullback for 2 days, and that was it. And then it got bid back up. That in large part has been that rotation, reflation trade for reopening. It has been definitely that, not the FANG stocks, if you will, which are completely cool, right? They're just kind of in limbo. And this is curious. John asked a question. How does let me just make sure I find the right exact wording, because he sent that to me via DM, and I want to make sure I get it included. He's not in the room. You've been talking about declining flows. He already knows my indicator for cumulative volume. And he wants to know, how does declining flows line up with my indicator, which you also know, because you also, you refer to it once in a while. So if that makes sense, does his question make sense? Because he said, since there seems to be a divergence there, it would be helpful to understand the differences between the two.
Oh, sure. Yeah. So cumulative volume, and the way you're looking at it, is just kind of overall volume of transactions, right? We're measuring the velocity of volume, right? So is it moving in and out, quicker, or is it, going in heavier? So it's the velocity of those transactions. So there's like an X factor on top of it, if that were to kind of make it a little bit kind of digestible. So just looking at the overall volume is one factor. Looking at the speed with which volume is coming in and out is another factor to add into that mix. And then looking at the money transaction, the dollar transactions that are coming in, and then the size of those dollar transactions.
Okay, where is that on your app?
It's the third frame. So we call it the flows frame. It's the third frame at the bottom, and it's tracked like you've got the blocks. We just measure the blocks as bars, right? So if you look at the blocks, they're going to measure a positive or negative value based on buyers and sellers controlling the sizable blocks. But if you think about it, blocks don't necessarily mean all the value or liquidity, right? It's just the biggest transactions, right? So sometimes those can be counterintuitive to the overall flows, right? So maybe overall flows are a little positive, but the blocks are already out the door, right? When you see them all going in the same directions, pretty typical that the market's moving in a downtrend. If you see them all going in a positive direction, then it's pretty typical that everybody's on the same page.
Have you done that back testing, for example, January, February, March of this year?
Yeah, you would see them like you saw the flows like start to flows diminish quicker. You can see it in silver right now. So like silver's like fighting its way. Flows peaked back in the summer, and they have just been steady leaking out, where the velocity of those flows have been leaking out too. And
I have an indicator for that. Exactly.
I would call it like waiting
August
on a crack.
6th.
Yeah, it's waiting on a crack back.
It has not come back.
Yeah, it's pretty clear. The times that it gets murky is when you've got kind of repositioning going on, or a bunch of different things taking place. And so there's no exact formula for the markets ever, right? It's all about the kind of the bulk of the pattern that's unfolding in the pattern of the actual purchases, right? So because when you look at price, a small lot can push up price another nickel, right, or another 10 cents, and that one order will move price up. But when a whale comes in and crushes 3,000 orders underneath that with a heavy volume, that's going to be impactful. And so right now, you do see what you're seeing with your cumulative volume is still sizable transactions moving things up the chains, right? And until those roll out, and you just get, that's when it separates, right? So you've got the sizable transactions going out, volumes headed out, but price still leaking up. How, right? Small lots, the just continuing to get bid until they get overwhelmed by a big order, and then they get sucked down real quick, right? Because there's not enough people to bid that back up. So that kind of price action really sets the levels in the market, and that's what we're trying to track, really market levels, right? And so that's where those fair value gaps come into play. We just track the FVGs, where all the kind of the overnight action leaves gaps behind in the discovery. That's one structure that's on the charts. And then those flows at the bottom, you can't fight the flows, because if the big groups of players in the market are really pushing flows forward, right, and they're positive, you see them in a positive aspect. And you can kind of really see that on, think about it from last night. Let me look at that and I'll tell you which one
I can
to
see
pull up.
gold for sure remains very.
Yeah, yeah, exactly. So like you've got you can see if you look at TLT, like if
Yep.
you look at TLT, and you can see that no, even though price is trying to bounce, the bulk of the action, right, is still negative in the flows, right? And so it's a negative. They're not coming in like with the heavy velocity. And so until that gets over the zero line, it doesn't usually things don't break out because it's like swimming against the current, right? That's how I would describe it. Like you're paddling, but you're paddling against the largest players in the market with the highest speed in the market because it is a speed market, right? Velocity is a huge piece of it. So and you can see really like I would point back to if you look at the S&P
Yep.
500 and you look back at like July and it's on that daily chart. Yeah, and you can see the pink line
Yep.
breaks up and gets a positive. It turns positive. It went from negative to positive.
Same thing. I
And
did
it
the same.
it never really looked back.
Yeah.
And as long as it stays in the zero land,
Yeah.
then it's you've got supporting infrastructure.
Okay.
And so that's really the logic behind it from a real simplistic standpoint. I mean, there's a lot of like math and
I know
calc on that,
it's
but
the same concept. Above zero is bullish, below zero is bearish, and it's interesting
keep it
because
simple.
I
Yep.
kept in my room going, okay, we're just about ready to cross over the zero. Hold on. It looks
Yep.
like a cliff dive. We're getting ready. And it got saved not once, but twice in the
Yep.
past month.
Yep.
I'm like,
Yep.
dang, they knew it was coming.
Well, it's so funny. You can see levels if you're tracking that. If you're tracking the flow, and I know Chris Cole's been talking about this a lot lately from the options flows perspective, and a lot of other really smart options guys are really talking about it too, in the sense that like the options flows are driving a lot of it, the underlying securities to move, right? And I think that this is the underlying securities flows, and then we're adding the options flows to this too, so that can be seen as well, because it really seems that like you look at Tesla as an example, that the market is dynamically changing too, where you really need to have some semblance of exactly what you're talking about with the flows and those levels, because if you don't have any idea about those flows and those levels, I don't care what kind of fundamentals you're talking about, like those things hit that zero line where you're talking about, they're about to break, and bid comes in and it spikes it right off that zero line, pups it back up, and then moves, and you're now back into positive territory, and you're like, well, I'm going to wait for a cheaper price, I'm going to short sell it, and you just get blown up. Or
Yep.
I'm not, or like when you're trying to buy it when the flows are going out the door, like they're back in September, you can see that once that broke zero right on the chart right there, it never really came back for a little while, like where
It's actually been really interesting because quants can't do their game as well because historical data used to matter. Now it doesn't. When you have a 10 sigma deviation move from the factor rotation growth to value, or you have the 4% expected move during election week turns into 8% for the SPY. It's just like,
yeah. And I've been thinking about this lately, like it's like the markets have moved in size too, and so the options market's a lot bigger. So I mean, does the
huge.
historical
It is now wagging the equity.
yeah, so it's like, does the math really jive to look at it from historical perspective, or is the math just is what it is now, right? And I think it just is what it is now, and adjusting your models to kind of be forward looking and track these things was really important versus going, hey, because it did this back in 2016, it's going to do this now. It's like,
So
no
what's it going to do
chance.
now? Because we got to get to the China presentation. That's the bulk of
Yeah.
this interest. And I want to just, highlight that it's the new not normal market, politics, the geopolitical background, China, Iran, and the Eurozone. Everyone is kind of like struggling right now, especially with COVID and getting fiscal budgets passed, which is still at, loggerheads here. What do you think with all this macro backdrop not really moving, if you will, the narrative? Liquidity is, flows clearly are.
Yep.
We have a year-end, melt up, in play, which includes value for once strongly. What do you think is going to happen? Not just after this week, which is the monthly expiration on Friday and VIX expiration on Wednesday, but into year end. Has anything changed since we kind of assessed last time?
I think no, I've been saying for last 2 weeks that this last week and this week were pretty key to knowing what's going to happen for the next uh, 6 weeks to the end of the year.
Yep.
Because once you get through this expiration for VIX tomorrow, and then once you get through OPEX on Friday, then you're going to have a lot more clarity as to positioning from a flows standpoint. Because we're sitting, like, if you look at the Qs right now, they're sitting right at the middle. They're sitting right at zero, and you're going to get a trending move either way. So if it's VIX gets crushed after expiration tomorrow and you see massive flows come in, then yeah, you could have that total melt up, like, Super Santa rally, right? And that's really going to drive harder with the value stuff because the bigger upsides there than the Fang world and the Qs. But I think they could move a lot too because they're just sitting there kind of on a knife's edge where they could make a real trending move either way. So I think that, like,
But we also have potential year-end tax selling, right? I mean, there are some other dynamics that come in.
yeah, it is, and that's, like, I think it's short lived, right? Like, people will buy into that. Like, I just don't think that until you see underlying shift, right, to vol, if vol switches places, right, and starts rising as this I mentioned this yesterday. If you can see volatility rise, and we track that in the app with a few algorithms where volatility will actually follow up with the indexes in kind of a pinnacle, where the indexes are going to finish and volatility is coming up ready to just cruise. And so that a natural phenomenon that seems to be a pretty consistent one lately in the last 2-3 years. We're not seeing that yet. If that plays out later this week, and then you get into the first of next week, because I think this could potentially move all the way into Friday till option expiration, and usually there's moves 2 to 3 days after that, at the latest in the indexes. So I think that, like, probably waiting to see where the flows sit, versus speculating on what people are going to do or not do, because I think that the dollar is still sitting there. It didn't break down.
Yep.
I haven't seen it
12
break down.
weeks. Yeah.
Yep, and so that's still sitting there, and you got a powder kegs everywhere, that could get that cooking. And if you got vol sitting there, it hadn't broken down. I'm fence sitting, like, we're fence sitting. We're definitely not, like, long here, outside of some small stuff, and then we're definitely not short here yet. I think that volatility is cheap. Anytime, I mentioned that yesterday, anytime VXX gets under $19 is, like, pretty inexpensive in the last 6 to 12 months.
Yes.
And I think I don't look at things anymore. We're really pragmatic, in the sense that seasonality is, like, somewhat natural with the tax stuff, right? There's some things with that, and there's some seasonality to kind of the Santa rally historically. But what you're looking at right now is, so we're in 2020, right? Like,
Yeah. But we
2020
have this
broke.
COVID Grinch who
Yeah,
could
yeah.
easily steal Christmas.
Yeah, well, I think it could be a lot heavier than that. Like, um, I think there's a lot of dynamic impacts for the next 2 months. Somebody said something yesterday. I think it was really smart. That if you get it could be so inverse to logic that if you get a hugely painful winter with COVID, that you could have a massive stimulus, right? And that could kick things right back into gear in January with reallocating and, like, this huge market move. I think it's pretty fair thought. It's totally speculative, right?
No,
But
but it is already out there, this
thought.
equity nirvana, like you said. And you've written about it for months, and then, the big houses are coming out saying, guess what? We see equity nirvana, which is
Yeah,
exactly when I start to doubt the whole
I
setup.
agree. I agree. I agree. I don't see gold and silver playing along. Treasuries are still awkward. You've got
That's
the
good. Yeah.
dollar, which is still not broken down, and it needs to break down, and the euro needs to break out. That's how that needs to roll if it's really gonna die right for the next leg. I'm not seeing that, and until so I think you're at a moment where you could get, if you go get heavy, you know Murphy's law, and just get blown up, right? Either way, I think that if you played the value rally, the last you guys were all over that. If you played that, that's pretty solid. You're
That
hitting
was
some levels
really,
though.
really solid from May until June, but then it reversed violently. This, if you weren't already positioned,
Oh, you just missed it. Yeah.
luckily, like GM and Exxon, I mean, that's about it, right? That pop-up was uncatchable.
Who went home last Friday and was like, "I'm gonna buy value," right? Like, because
It's
let
always
me.
good to have
Let,
it. I
let-
believe it's always good to have it. And charts were looking fabulous, but there was no
yeah,
confirmation. So by the
yeah.
time it confirms, it's too late.
Well, who you gonna go home and buy AMC theaters last
No,
Friday,
no,
right?
but
No, yeah.
Exxon in January makes a lot of sense, you know.
Totally, totally. Yeah, especially because there might have been some underlying options activity.
Oh, absolutely. But also VIX in January I have as well. So it's just funny that you say that. Okay, so let's go on to China because we've talked about the market and the underlying flow and instruments, if you will. I want to just take over the screen, kick me right out of there if you want to, and do your thing.
Okay, so we had talked, you and I had talked about this a couple weeks back, and I was just saying some things about China and kind of what my thoughts were about it, because we work with folks all over the world, so we kind of have in the development software um, sector, so we kind of get a perspective outside of the United States, and a lot of people only get what they hear, right, or see from the wild narratives that we're getting from here in the media, I guess you would call them. So this is a really kind of high level just take, and I needed to organize my thoughts so we could get through it in like 15 minutes. So this isn't like a very tactical thing for somebody to go make a specific trade with. This is more of a perspective that we have based on things that we're seeing and have seen, and where we're seeing something that really could be definitive for the next few years. So the 2020s obviously started, this year, and they've been off to a fiery start. And really, this 4IR is the fourth industrial revolution. And, we'll touch on this a little bit later, but that really involves artificial intelligence and machine learning. And, why am I talking about that? And I'm going to kind of talk to you like I'm talking to somebody at a bar. And there's a thought process behind all this. So if you go to the steam engine, most people like studied school, they paid attention a little bit and didn't. I read an incredible book by a guy, and I'll go ahead and show it right here. Andy Kessler. I don't think it's showing. It's terrible, but How We Got Here is the name of the book. I'll share it with you, and you can share it with everybody. But Kessler he was a semiconductor engineer. And then he became a hedge fund manager and moved to Silicon Valley and was really instrumental in the semiconductors space in the 2000s. And he wrote a book about how we really got here in the United States. What the backstory is that King George went to the major iron worker of the day in 1774, Wilkinson. And he put a big order in and said, if I'm going to put down these colonists over in the New World. And I'm paraphrasing all this, so if my history's not dead spot on, you history buffs, don't shoot me. So he said, you got to fill this order or I'm going to hang you. And so he was inspired. And he had a guy that was working for him named Watt, and he had built this steam engine. And the steam engine was going to be able to change the way that they did everything as it related to ironworks and speed it up. So he fills the order and meets a guy by the name of Bolton. Bolton and Watt is the first real big IPO in England back then, and they were also friends. Wilkinson was friends with a guy by the name of Benjamin Franklin, and this technology ends up in the United States. So the United States is like these colonists, right, that are sitting there, right, sitting on tons of natural resources. It's British colonies. The British want it back. They want to control its taxation. They're imperialistic is my major point about them, right? It was imperialism. They didn't create anything. The creation was done by others, right? They create steam engine by default. United States gets a hold of the technology, cotton gin, steamships, railways, you name it. US had the most natural resources on the planet. Within 50 years, the United States not only didn't lose the Revolutionary War, King George lost it, right? And the United States was the wealthiest nation on earth. They were a net producer, exporter for the world. So this country is like 75 years old, arguably, by 1850, and is the wealthiest country in the world. It was the fastest in the history of mankind to become as wealthy as it was. And they also, because of the Constitution, because of the Bill of Rights, and because of the way that they handled intellectual property rights, they attracted all these people from all over the world, because you could come and immigrate and make something happen in this place of wealth. So then you move to this compounding wealth type thing, and this is the industrial revolutions that took place. So for the longest time prior to the steam engine horsepower, the term horsepower, for example, came from how many horses the steam engine displaced, right? And so that's where the name actually came from. So early 1800s, steam engine changes everything. We kind of go on through this whole period through the 1800s, and I'd really encourage everybody to follow Investor Amnesia. Jamie Catherwood does a fantastic job of kind of looking at all the little boom bust cycles in the 1800s and 1900s as relates to this type of technological advancement. But you get into the 20s, we make an automobile, right? That changes the way people do stuff. Made in America. 1950s, 1970s, personal computing and tech started taking off. So again, just compounding wealth. The United States is just a very, very wealthy country based off of creation, right? We're net creators and we're net producers. In 1980s, semiconductors, right? They lit a fire in tech. And all of a sudden in the 2000s, the internet, right, really starts running away, late 90s and 2000s, and it really connected the rest of the world. 2010s, mobile devices, right, moved utility to the edge of the network. And now in the 2020s, it's about AI, machine learning, and robotics. So you can see the United States has had a control for all of these major economic events for the last 200 years that have created all the technological progress. Most people come to the United States to invest. They bring their money to the United States. They buy treasuries. They invest in Silicon Valley. Everybody comes here because the ideas are gestated here. We produce them here for a long time, and then they monetize them here. So it's a safe place as it relates to property rights and everything else. So in the 2000s, something changed, right? So well, let me just say this. In 2000, this is an image, and there's two images, and this is all from, I did not make these. These are from the Financial Times. Liz Fonts created these, and she had a presentation in regards to productivity. This is 2000. This is the United States is the biggest supplier for pretty much the entire world in 2000. And China has a little bit of production going on. When the internet came online and globalism kicked into high gear, globalization did, labor distribution went to the cheapest location with the highest output. So we had historically always made the stuff here. We'd always created the ideas here. Money was coming here. And in 15 to 20 years, we flipped from a net producer to net consumer of product, right? And we ramp up some creativity, but it's only digital. And we give up a 200-year competitive advantage. And I know this is really high level, but this is super important because we had always been the producer, the net producer for the world. By 2019, this is the map, right? China's the largest net supplier in the world. They're on track to build 38,000 kilometers of light rail by 2025. Their one road project spans all the way across all the Mediterranean, the kind of southern Russian area, all throughout the Pan-Asia area and into Africa. We don't have hardly any light rail in the United States. I mean, some cities have some, right? So they're interconnecting continents and have done this. They own ports of Greece, most of the insolvent Mediterranean countries. Most people weren't paying attention, but China bailed out Greece in 2013 when they had all those problems, and several of those other countries. When we talk to developers all across the world, the Chinese locations that are already built, their country, like the banks and everything else are already there over in the Mediterranean area. They own most of the debt and ports in Africa. A lot of people don't even realize how much of Africa they've already not necessarily like annexed or per se, but they're going to control the commerce in those areas. And we are a net consumer of everything at this point. And that changed in 20 years. So it was already kind of in motion-ish, but it really changed. And so when you look at this picture, it's really powerful as compared to this picture. So you remember we, go back to the steam engine. We're really in control of creating ideas. We're in control of all this intellectual property. We're driving the progress and the progress process through technological advancements. And now we're kind of at this place where the internet has come along in 2020, right? And the 2000s to the 2020 period. And information got dispersed all throughout the world. So we always had the best kind of source of information as well, because we had the universities, and there's always great universities all throughout the world, but the internet was a great equalizer as it related to distributing information and making people be able to access things and grow their knowledge base very quickly. Well, that changes the commerce hold too, right? And the intellectual property development hold. That's gone now. It's totally gone. And so, we are now at the tail end of that. So what do we have if we're not producing anything? And I'm not going to get into the Trump isolationism is the right thing to do. Biden globalism is the right thing to do. I don't really look at this from that perspective. It's just a pragmatic conversation that this is really just a formula. So we create natural resources. We have natural resources, intellectual property, industrial revolutions. We create wealth, population grows, middle class grows, the currency control, Bretton Woods, right, went into place. We took from the 1980s on, and we become really good at financialization, right? We have a declining middle class, increasing demographic demand, and entitlement programs. And we stopped producing ideas and creating new concepts. Now we're creating some new products, but the bulk of them are starting to be totally outsourced in every way, shape, or form. And now other countries are creating progress. So the US dollar is really one of the last mechanisms, if you come back up here, that we have no control over exports or production, right? We're a net massive importer, but we do export one thing. We export dollars, and we control the entire SWIFT system that the entire world operates. Try and send a wire to India, right? You got to go through a certain bank to go to a bank to go to a bank that gets to India, right? You want to send money to Iran, it's not happening. We just lock people out. The rest of the world doesn't care for this. We have control over emerging markets because we can force them to deal in dollars. And Brent Johnson is the guy to follow for all this mechanics, right? I don't want to talk about it and waste everybody's time here because I'm just making an overall point. But the only thing that we are in control of now is the dollar, right? We've given up control of all the production. So when you look at China's, where are they now? The natural resources, right? They're a huge country. They've created a massive amount of wealth. They have a hugely growing population. Their middle class is larger than our entire population, and their middle class is getting wealthier, right, as time progresses. And they do not have currency control, right? The renminbi has to go through Hong Kong. You guys know when the riots were going on in Hong Kong, well, very, very, oh, wow, it's so fascinating that that's where riots were taking place, right? Because Hong Kong was annexed many, many years ago. They gave it back. It was the two-party thing going on. Ultimately, they wanted to control Hong Kong because that's where they control the renminbi flow through for the Hong Kong dollar. Hal Bass is the guy that controls all the best knowledge about that, if you're looking for like detail into that discussion. But they've been working diligently to open their economy, right? Seeking to attract investment to be validated as a currency. Now, I know people have talked about the currency wars. Jim Rickards talked about it, but that's not what I'm really getting at, like currency wars. It's simpler than that. If you control the currency, you get in a situation like we're in, you can print your own currency. They want to be in that place because that's kind of, if you look back to the United States was not the currency control until when? Bretton Woods, right? So things had moved during that course of time, and when you're in control of the currency, it's funny, we stopped really producing stuff at the tail end of being in control of currency because it gets too easy to just control the currency. So you look at like the other thing that's going on with China right now. Look at the dealers. So we always talk about dealers, watch the dealers, because they're the pragmatists. They're going to just kind of look and see, okay, where's things headed? We're just going to sit in the middle. BlackRock announced in August that they were doing mutual fund banking for the actual Chinese, constituent population, and that was approved. And that happened on a Saturday in August, not in the news. It came out on a Saturday. Citigroup, same thing in September on a Saturday. Didn't say anything. Mellon, same thing. They're going out there and starting to bank the Chinese middle class and bank the Chinese wealth. And MSCI has been working on this for 3 to 5 years to create the access to invest in the Chinese companies. And I know, a lot of folks who talk about how shadowy a lot of this stuff is. I'll talk about that in a second, but just look at the surface. You see something significant happening, like our dealers are going over there, right? And so are they going over there to set up shop? Or are they going over there to do business? They're going over there to do business. So what? So now what? Right? So we've kind of we've put ourselves at risk, right? And now we're at this fourth industrial revolution that we don't have an edge on outright, right? We're not. I'm not saying we don't or won't be the one that comes out the winner in artificial intelligence and machine learning. I'm just saying that there isn't an edge that there was back in the 80s and the 90s with the semiconductors and the internet. China is arguably the leader in AI. They have the fastest growing middle class, the TikTok type stuff with Byte the Dance. I don't know if everybody even knows this. Sequoia is one of the largest investors in ByteDance and TikTok, and they went and begged Mnuchin and Trump not to blow that deal up and kick them out of the country. So our VCs are already over there investing in the technology that's being created in another country, not just that broker dealers, right? So the two largest basically cash controllers in this country are already headed that way. So if globalization is back on, right, and Biden is back on for globalization per se, unless something changes, then it's risk on for Chinese equities, once things shake out. If it's risk off, right, for Chinese equities, it's globalization is off. Is it moved too far too fast? The shadow banking stuff, the pragmatic capitalism is the way they perceive themselves versus democratic capitalism. They have a war risk, right? So pragmatic capitalism, democratic capitalism are two different things. That's the Uyghurs situation, right? That has been talked about in the northern provinces. Them and the NBA have some issues. So China just views things a little bit differently than we do. If we go to war, right, then that whole delisting thing that Trump was doing all the time, if they really want to take it to the next level, there's currency war risk. If Xi dies before 2030, or the whole, you said this a couple of weeks ago, and this is what started the conversation, is it's now ours, give it to me risk, right? Which is the Ant and Alibaba deal where they just take it, right? Because again, it's pragmatic capitalism and some totalitarianism. It's not, the IP is not really the same way it's structured there as it is here. With BlackRock going over there, with MSCI, with Citigroup, they're really going to try and refine that, and China wants that to happen, right? Ray Dalio was on there today, and I know everybody rolls their eyes at Ray Dalio, but there's a lot of people, pointing this direction, and if we're not going to risk off, right, Chinese equities or globalization risk off, then they're pretty prime position to continue to grow. There's a lot of equity opportunity there. And then there's the whole dark side, right? Which is the Hong Kong dollar situation, the manipulation of that, the COVID-19 origination, the World Health Organization, the IP theft. We can vouch for the IP theft situation because the Committee for Foreign Investment in the United States has spoken to most tech companies, and you have to talk to them and go through some different things to make sure that you're not allowing different ports and different internet type of access as it relates to your IP. And it's not even, the government doesn't want it. They're trying to make sure that it stays here, right? Is there any type of risk of destabilization over there? This is the first country that we've ever booted out of the country, right? With the Houston consulate. I think everybody remembers this a few months back where, we had thought that maybe, just maybe, that there was some instigative stuff going on with the riots that were taking place, not the peaceful protests, but every city there was riots going on too. Well, sure enough, that's what they had found in the Houston consulate, the Uyghur human rights violations stuff. There's ghost cities. And then they have a concern with arbitrary econometrics. The numbers, though, the dilemma is, the numbers over there are so large, right? From their middle class being so big and growing so fast, and then their footprint throughout the world, and them kind of taking the lead in artificial intelligence and machine learning and robotics, that, what's going to slow this train down? And that was a big piece of that was not discussed in the election, really top level. It's kind of set to the side because of the sideshow that the whole thing became. But this really is the greatest story of the 2020s, because ultimately, the investment inclusion and confidence of the rest of the world leads to production control of the world, leads to the winner of the reserve currency at the end of the day. And we really have one weapon left, is that dollar. And so is the United States going to call these swap lines and do some different things to ensure to give themselves a chance to fight through what has been an economic debilitating situation with COVID? And COVID, right, if you think about game theory, COVID destabilized our tax basis from a small business perspective. So all of our small businesses, some 50% of small businesses have been wiped out, and small businesses pay about 90% of the payroll taxes in the country. And so if you're trying to, knock a leg out of a tax base and make bonds not so appetite, and I'm talking really high level here, right? That would be a leg I would knock out, right? So, it's a very interesting thing that I think everybody needs to frame a dynamic around to see how this unfolds, because I think it directly affects the investments in the next decade across the world. Like first derivative investments, obviously those would be Chinese equities. Global risk off, right, would be short these equities, and short China. Risk on, globalization risk on, then these companies could do very well with many new companies coming online. Second derivative benefactors of the one road deal is the United Arab Emirates. Like we work with developers all over the world, and the UAE, they're all doing business in the UAE, and it's growing as a financial epicenter, because as Africa comes online, right, with the internet, and as Southeast Asia that's a financial hub. That's a big financial hub that's taken a that could really be impacted by the UAE, by the One Road project. The Mediterranean shipping countries, the Southeast Asia corridor. So if globalization comes on, and that's why I'm saying this is a pragmatic, kind of layout here. This isn't a picking a side. Depending on how this shakes out as it relates to the dollar and the reserve currency, the way COVID plays out, this is maybe the greatest story of 2021, in my opinion, because if things continue to migrate, we continue to kind of head down this path where we're not addressing our own infrastructure and our own productivity capacities, and we're stepping back from creating the intellectual property that's going to drive the fourth industrial revolution, which is 100% artificial intelligence and machine learning, then we set ourselves at risk, which is why I think the broker dealers are starting to, hedge, right? At the very minimum, they're hedging. And why I think that you're seeing, the financiers like Ray Dalio hedge, right? They're hedging. These guys, the globalization type bodies are all coming out saying this is, we should head down this path. So I think whether the trigger is the globalization or not. So risk on, risk off for globalization again. And Trump was, obviously really pulling that stuff back. It was bringing that to the forefront. Biden, different story. I don't really know if Biden has even come out and said exactly how that would shake out.
I don't think he's ready to. Just on that comment, I mean, this is definitely, Trump poking the snake, if you will, or, U.S. China trade war. It's closing the barn door after the horses are already out. I mean,
correct.
We've got decades worth.
Yeah, correct. Yeah, and so that's why I say it's genuinely, how does that globalization unfold? And then these are kind of some themes that could play for an entire decade, right? Like some of these second derivative markets could be huge wins if it does unfold. Because like you saw Stripe just buy a tech company in Kenya for almost $300 million 2 or 3 weeks ago. Because payments are coming online out there. The internet is just reaching all those countries. So if you step back, it's a much bigger conversation than just like, imperialism we didn't make it to where we were through imperialism and coin clipping. And I got a blog that I wrote about that. It's on our Learn site, and it's the progress process. Everything I described in the industrial revolutions, from the steam engine to the computer, internet, semiconductor triggering, all that, those are all technological advancements that create wealth, right? They're derivatives. What are we doing right now? Like, as it relates to that, like, that has got to be the thing that drives everything forward, where we can continue to find ways to create new things. And this artificial intelligence, machine learning, robotics. And that's why I, really followed Kathy Wood and was really want to try and figure out what's going on with that. Because I know they took a company from her Monday for ARK Invest. But like, they were really trying to drive that stuff home for the the fourth industrial revolution. He who controls that, the country that controls that, is going to be the one that controls the next leg in all this, in my opinion.
But
And that's
trying to roll back, free trade, which in Asia, it really isn't free trade. But I mean,
right.
trying to roll that back and create protections after the U.S. industry has already given them away, or that's going to be deemed socialist.
Yeah, I don't, I don't know how, like you said, what'd you say a second ago? The horse out of the barn.
Yeah.
I think it's a real candid statement. And so how does that shake out from a political perspective, right? And what impact does this have, domestically to us, when we're not producing anything, right? That
We're the largest debtor nation, not creditor.
I mean, it happened very quickly, and our demographics are not in our favor either. So this is like I said, there's a lot to unpack here. We could probably talk for a couple more hours on some different points here.
But it's framing the investment idea, but it's also the risks that you talk about GORPY action.
Yep.
I saw a lot of GORPY action, in the 2 years that Trump was really, before the election campaign, if you will, was really being created with, his trade war on China, not just from 2018, but tons of insecurity, if you will, over holding on to that space of the China plays, if you will, until they broke out, just this year strongly and have not looked back. Almost as if when he said, we're going to wage a U.S. capital markets war and pull back these trading vehicles, it was as if they said, fine, we'll list in Hong Kong, and boom, money just flew into these issues, and they have been running like hot fire flames. Do you notice the same kind of thing where we're like, it was GORPY until China said, fine, we're going to call that bluff.
Yeah. I think that it's a numbers game, right? Like you can look technically speaking at this stuff, but and there's some, the risks, like the Alibaba thing and the shadow banking, and there's some significant like banking things that have to be sorted out there, that would assume that they would want to try and get in control, just from a mechanical perspective. But you see that they're kind of following the same trajectory that you saw our tech, right, roll with. But the one thing I'll say is that I noticed this a couple weeks ago, and this will be the last thing I kind of say about it, is that you saw this breakdown, and this is a perfect example of flows. This broke down right here and has not looked back, and this is Alibaba, and this.
But that was because of the Ant Financial.
Yeah, correct.
And I should say restrictions on issues that were bank-like.
Correct, and correct, because they're trying to become a lender. So this is still early in the story, I think, for all this, from a tradable perspective, and it's to be traded just like anything else. From a big macro perspective, I think that how this shakes out in the next kind of maybe 6 months, right? It's where we can see what kind of policy that the new leadership is going to put into play. Is the Senate going to kind of get in the way? Josh Hawley and Kyle Bass and some of these folks are very much after the NBA and a lot of the other factors that are associated with people doing business over there, versus kind of the free market globalism type narrative. Which one's going to kind of play? And I think that's really why you're starting to see the dealers move that direction and start to set up shop, because is it inevitable with the size and scale of that in China? And it's worth noting that India has a huge growing middle class too. So it's not just China, it's the whole Western Asia environment from a population perspective. So this is like definitely not a next week trade idea that I'm really kind of looking at here. This is more of what's going to happen in the 2020s. And I think that we work with a lot of folks from that part of the world, and India and Southeast Asia, the Europe, Mediterranean, and you know, it's TBD, right? I mean, China's already moved in all those areas, so
It isn't just to be determined. The
yep,
money flow in hedge funds have gone all in on China of
yeah,
recent,
yeah, that's good.
because
That's
they
very good to know.
recovered. Yeah, they
Yeah,
recovered much faster than we did. In fact, we didn't recover.
yeah,
It just got worse and worse and worse. So money already was flying into China, and except for Baba's, recent rug pull, they were really anything coming out. Electric vehicle plays. Oh my God, Neo, in fact, reported tonight. I haven't looked,
yep,
et cetera, et
yep.
cetera. But the EV movement, of course, the internet, the banking, they have been really bid extremely well, and that's not even part of the, I want to call it, emerging market fanfare right now with
Right.
value rotation. It preceded that from the summer. So that is a strong, it looks, actually, we talked about this, the FXI chart that I had
Yes.
shown.
Yes.
Let me
Yes.
see if I can show that real quick, and then we'll close because it's after 5. Let's see if I can do that really quickly. Shoot, sorry about that. We there? Yes. Okay. So this FXI, which we talked about from a standpoint of monthly, I mean, look at this puppy. It is just beautiful. I mean, I'm a technical trader as well, right? As macro, intermarket, and all this other stuff. I'm looking at that going, that was a fabulous breakout on a monthly, right? The K-Web contingency. It tagged, it came right back in pretty quickly, but that's still very bullish.
Yeah,
So,
I think my 2 cents is and this is totally conjecture, right? Is that a mean reversion in the dollar is going to test all of this?
oh
And
yeah,
what happens in that mean reversion of the dollar? Just a mean reversion, not anything crazy. If you look at that chart that you were just looking at a minute ago,
yep,
just now, the FXI, that could easily bring that back to that breakout level. And
yes.
then you're going to see that get tested, and then you're going to see this get tested. What happens at that nexus, that test, should drive a lot of things. Does the dollar kind of fly for some reason, or is the dollar now it's going down again, right? And it is the decision and policy to just destroy it in general. I think
When does the dollar yuan actually stop going down?
yeah, yeah. Well, and that's I mean, these are questions that you're gonna have to have some time to let the price action shake out on, right? And I think the price action is going to tell you more than probably any narrative will once we get there. Is that what does that dollar do? What does FXI do? What do these Chinese stocks do? What are the U.S. Decisions from a fiscal and monetary policy? And then those are going to set in course what probably is going to not be able to be unwound from that point forward. I think that next move in the dollar and where it lands to some sort of mean reversion is pretty critical for the next 2 or 3 years. That's why I was so hammering the dollar, that's why I'm a one-track DJ with one disc, right? I don't play the U.S. dollar, right?
Well, no, because it matches my saying, which is, the US dollar makes the weather, and the rate of change determines its severity. Yep, and right now, there isn't any rate of change going on, which actually just means it's building up the energy.
Yeah, yeah. And so we'll see. That's all we can say. We'll see.
Well, thank you so much. We're running after 5, and I didn't even record the first few minutes of this until you came on. So good for at least I grabbed the whole conversation of where we see market flow, and your presentation on China. Thank you very much. It's lots of food for thought as we move into the new year with new administration and new policies.
Yep.
And yeah, what's going to happen, because we're 40 years getting to this point.
Yep.
Finally,
we're there.
Realizing there are some things that need to be unwound. How graceful will that be?
Yep.
Yes, including the dollar. And we are nothing without. So let's hope for the best. Okay, I thank you so much, Jonathan. We'll talk next Tuesday. Let's get into some of these flow indicators. People can use those real time as it relates to staying on the right side of the trade.
Yeah, we'll have a bunch of stuff. We'll have a bunch of examples too.
All right. Thank you so much. Everyone have a great evening, great rest of week.
Thank
Bye.
you, Samantha. All right. Bye.
Bye.